Hey everybody, it's Dan Rawich. It's Tuesday, August 7th, about 9:30 p.m. Pacific time. We had our live trading call this morning, and this is sort of to one explain everything again for those of you that maybe didn't quite grasp it, and also as kind of a makeup for people that couldn't make that call. The whole call is recorded on the Facebook Live page, not Facebook Live, but the Facebook Option Addicts page. But it's like an hour and a half with questions and everything, so I don't expect anyone's going to want to listen to that. So this is hopefully a 5 minute or so update of what we did. So the stock that we took a position in is GLW, which is Corning. Corning has just been on a tear since their earnings release. You can just see it's climbed a lot, and it's very, very top heavy. So one couple things that I follow technically. One is I like the 5 and the 9-day moving averages. Of all the things that I've played with, I've never seen anything more closely relate to the markets. And if you follow this, you'll see that it gave accurate signs pretty much every time. So here's an obvious example. When the blue line crossed over the red, we were in a downward trend. Now it might not cross until the downward trend's 1 or 2 bars into it, but that's okay. I'd rather miss a couple days of a trend than jump in too early and get whipsawed. So blue over red, you're dead. And you can see here when it got to the bottom, the lanes are very much running together, and it was pretty flat. And then you can see that red slightly came over blue, and we went up. And then blue crossed back over, we went down, and so on. And what you can see here is, one, these lines have not gotten this far apart in a very, very long time. Two, you can see that red is just about to cross blue. And in fact, if I do like an hourly chart or even some of these other terms, it actually is crossing. Next, I like the MACD. The way I remind people to look at the MACD is I think of this as a shark. And when the shark fin comes out of the water, the shark comes up. So you can see MACD's rising as the market's rising. Here's an example. Market was pretty flat, so MACD was pretty flat here. You can kind of see the colors. And then all of a sudden, the first point of the fin went down, and this was almost perfect. If you wanted to wait for a better signal, you'd wait for the second fin to be underwater, and you would have caught this move down right here. Then this little bump up, same thing. MACD comes up, it comes up. So you can see MACD is just about gone from the peak of the mountain to touching. It's very close to happening. And then the stochastic, it's still showing. It's not showing overbought so much, but this is the momentum index, and you can see how that's just turned down. And it's the same thing over and over. You can follow these things, and you can see when this dipped, when white crossed red, and it fell below this baseline, the market fell hard. And in my opinion, white will soon cross red. They'll cross up here. So I don't know if this caves tomorrow or 2 weeks, or sorry, 10 days, but it will cave in the next 10 days, in my opinion. So that's the stock. So with the knowledge that we believe this stock is going to go down, and we don't think it's got any chance of going higher, we structure the trade that way. So let me show you what the trade looks like. It's pretty simple. The trade is called a vertical put. And if you just look at this, it's very intuitive to me. Green is good, you make money, and as the price goes up, you can follow this underlying price line down here, and then up here is actually the P&L of what happens with this trade. So this trade breaks even at $37.09. It's currently at, $32.75. So it's currently at $33.06. So once it falls 20 cents, we're in the money. 20 cents is not much to fall when you see a stock that's that overbought. If it goes low and I'm wrong, if the stock goes up, so you can see here as I go to the right, the underlying price is going up and the P&L is going down. No matter how high this stock goes, if I got this wrong, it's a $25 bet. And if I've got this right and I think it's going to come down to around 31, it's a $75 win. So it's 3-1, which we always like. We could be wrong half the time on these and make money. And I think it's perfectly matched to the current market situation. Lastly, I know these are small numbers. You got to remember, we're only doing one contract. Hopefully, I don't know if it's going to be a month, 6 months. It depends on your comfort level. You'll be doing 10 contracts. That's what I do. So this would be a $750 win. But again, I'm trying to trade more of the smaller sizes along with you guys so you see the same effects. So that's it. I hope it makes it. Oh, let me show you the trade. Sorry. So this is what the trade looks like. The call, as I mentioned, it's called a vertical put. And so basically what you're doing is you're buying one put and you're selling another put at slightly different strike prices. So in this particular case, we're going to sell the August 18th. So our order form would say sell to open the August 18th $32 strike price, and that's a put. And we're going to sell that. We're going to get paid about 9 cents for doing that trade, somewhere between the bid and the ask. If you want, let's round. We'll say we'll get paid 10 cents. And then we're going to buy our insurance policy for $33, and that's the same thing, August 18th date. And we're going to pay 35 cents for this insurance policy. So we get 35, we pay out 10, the net trade is $25. And by the way, this is the total impact it has on your trading account. So if you have a $2,000 account, you can imagine you can still do a lot of trades. So I like this one. I hope it makes sense. Let me know if you have any questions. And by the way, I think this trade will be absolutely fine tomorrow. If the stock craters, we'll look at it again. But I think this is an order you can put in and put a limit price of 25 cents. And if you get filled, you get filled. If the market starts cratering and the stock falls, you just won't get filled. And if the stock skyrockets, you will get filled, but it's still going to come down. So yeah, I would say put this in as a market order tonight or first thing in the morning. Okay, thanks. Take care. Bye.